Okay, good afternoon, everyone. Welcome to our session. I see there's quite a lot of students that's joining now, so I'm going to wait about 5 minutes. So let's start 3:05. Okay, so that everyone can just get an opportunity to join, and then we'll start 5 minutes past 3. Okay, good afternoon, everyone. I think we can must start. Okay, so some of the students did let me know that apparently the recording for Friday wasn't uploaded yet. So I will just follow up with National. So because it's on their YouTube channel and all of that, I unfortunately do not have access to that. So it has to be uploaded from them. So I will just remind them that they will do that. And then as well as this recording then from today. Okay, so on Friday, we then did the 2024 paper. And then since we had time, we started the 2023 paper as well. So we did do question 1 already. So then for today, we're going to continue then from question 2. Okay, so that will also be shared. The 2024 one was shared already. But then the 2023 one, I will then also share with your lecturers and everyone so that they can also then send that to you. Okay, so I'm going to share my screen. Then we can look at that. Okay, so like I said, question 1, we already had a look at. So then today, if we have a look at question 2, they give us a trial balance of REM Limited and Snooze Limited for the year ended 31 July. So you'll see the debits, the credits. Then at number 1, they tell us that on the 1st of August 2020, REM Limited acquired 45% ordinary shares for 616,000 Rand in Snooze Limited, a manufacturer and supplier of bed linen. The retained earnings of Snooze Limited amounted to 320,000 on the 1st of August 2020. Snooze Limited is incorporated in South Africa and its principal place of business is in Cape Town. REM Limited provides strategic management and operational services to Snooze. The arrangement was classified as a joint venture in accordance with IFRS 11 joint arrangements. Okay, so remember on Friday we said that if they acquired less than 50%, so we basically know that it's a learning unit 4 or a learning unit 5 type of question, they need to tell us for learning unit 4, they need to tell us that they have significant influence. So then we know, okay, this is a learning unit 4 associate question. Or then they have to tell us that it's a joint venture or a joint operation so that we can know we are busy with learning unit 5. Okay. Then at number 2, at acquisition date, no unidentified assets, liabilities, or contingent liabilities existed, and the fair values of all assets, liabilities, and contingent liabilities were equal to the carrying amounts. And then during the current financial year, REM Limited purchased inventory from Snooze Limited at cost plus 25%. At year end, REM Limited had inventory amounting to 228,000 on hand that had been bought from Snooze Limited during the year. Then number 4, on the 1st of August, REM Limited sold machinery to Snooze Limited for 278,000. The machine had a carrying amount of 208,000 and a remaining useful life of 5 years on date of sale. Then they give us the tax rate is 27%. The published market price for the investment in Snooze Limited is 640,000 Rand. The REM Limited Group accounts for investment in associate using the equity method in accordance with AIS 28, investment in associate and joint ventures. REM Limited accounts for investments in associate at fair value through profit and loss in its separate financial statements. The fair value of the equity investment is equal to the cost, and then each share carries 1 vote. And then they ask us, in your own words, define a joint venture and a joint operation. In terms of IFRS 11 and IFRS 12, explain how a joint venture and joint operation would account for its investment in its financial statements. And then they also ask you to prepare the statement of profit and loss and other comprehensive income of this REM Limited Group for the year end 31 July 2023. Okay, so you'll see that question 2.1, that's a question that they also like to ask. That's a theory question that's been coming, I think it's about for the last 5 years. They really like to ask that question. So let's quickly start with that one. So for 2.1, a joint venture is a joint arrangement whereby the parties have the rights to the net assets of the arrangement. An investor in a joint venture accounts for its investment in such investee in its financial statements, applying the equity method in terms of AIS 28, investment in associate and joint ventures. The equity method is a method whereby the investment is initially recorded at cost and subsequently adjusted for post-acquisition change in the investor's share of net assets of the investee. The investor's profit and loss includes its share of the investee's profit or loss. Okay, so that's your joint venture. Then a joint operation, that's a joint arrangement whereby the parties that have joint control of the arrangement have rights to the assets and obligations for the liabilities relating to this arrangement. Okay, so you'll see for joint venture, it's the net assets. For joint operation, they have the right to assets and obligations for the liabilities. And a joint operation recognize their share of items shared jointly in terms of IFRS 11, joint arrangements. Joint operations proportionately consolidate line by line its share of all income and expenses in the investee and its share of all assets and liabilities. Okay, so they said in your own words, so you can take whatever you understand and what you can remember from this. Okay, it doesn't have to be word by word like it is here, just some sort of understanding that you have regarding this. Okay, then 2.2, they ask us to do the statement of profit and loss and other comprehensive income for this group. So just again, remember, statement of profit and loss is all your income, all your expenses. Okay. So if we start there, we always start with revenue that you should know from first year accounting already. So it's revenue minus your cost of sales give you the gross profit. Sorry, I just quickly want to see. Okay. Sorry, I just quickly want to go back to the trial balance. Okay, there we go. So for your revenue, you'll see now for learning unit 4 and 5, we focus on the parent company when it gets to financial statements. Okay. So if we reverse to learning unit 1, 2, and 3, if this was a company where they had control and then you had to do revenue on your statement, you will take your revenue from both companies and add them together. Then you go to your journals and see what journals did we do that affected revenue, and then we will add or minus that. But in learning unit 4 and 5, your financial statements, especially the statement of profit and loss, focuses on the parent company. So you'll see the revenue is 8.8 million. The cost of sales is 5,912,000. So that's all from REM Limited. And then we can get the gross profit. Okay, then you'll see I just put in other income. And then from this, I also deducted. I just want to see. Okay, no, that's there as well. Okay, so let's look at our other income. So 460, that's your. So you'll see for other income, it's nothing. Dividends received, there's the 460. So you can add them all together as other income. Or if you want to, you can have other income and then dividends received will then be separate. That's fine. You can do that. So there's your 460,000. That's your dividends received. Okay, then of the 480,000, let me just get to that. Oh, where do they give you that information? Oh, on your dividends paid. Okay, so since we put dividends received in there, you can also put your dividends paid in there. But remember, this dividends is now for Snooze Limited. So when we do any statements for Learning Unit 4 or Learning Unit 5, the company that we purchase interest in, that amount will always be at the percentage interest that we have. So we're not going to use the full 480,000. It's 480,000 times 45%. Okay, so there's your 480,000 times 45%. So that's where the 216,000 is coming from. Then at number 4, they tell us that the one company, REM, sold machinery to Snooze for 278,000. The machine had a carrying amount of 208,000. So that profit on the sale, remember, that will be eliminated. So we need to take that and then eliminate or look at that profit that they made on the machine. So if we take the 278,000 minus 208,000, again, times the percentage interest that they have, and we deduct that because that gets eliminated. Okay, and then for both learning unit 4 and 5, we will have a separate line item on the statement of profit and loss that will have the share of profit. So for learning unit 4, it will say share of profit of associate. For learning unit 5, we say share of profit of joint venture. Okay, so let's quickly look at that. So now we take the company that we purchased the interest in and we calculate their profit. So if we go back to the trial balance, so there's your revenue. So it's 4 million. We plus other income, so that's 220,000. We minus all the expenses. So we minus cost of sales. We minus other expenses. And we minus the income tax expense. Okay, so if you deducted, there we are. If you've deducted all of that, so there's your revenue, other income, cost of sales, other expenses, income tax expense, all of that times 45%. So that's where this 286,200 is coming from. And then remember, they sold inventory. Okay, they told us at number 3 that during the current financial year, REM Limited purchased inventory from Snooze Limited at cost plus 25%. So there's your 228,000. So we take that, we calculate the cost price of that. And remember, we need the after tax. And all of that also at 45% interest that we have. Okay, before we continue, any questions up to that point? Okay, then we continue. Okay, so next up we have all the expenses. So your other expenses, remember that on that machine that they sold, there's depreciation. So if we eliminate the profit on the sale, we also need to eliminate the depreciation. Okay, and what I mean by that, if we quickly go back. So for the one company, the machine's carrying amount was 208,000. So they are calculating depreciation on the 208,000. But if it was sold to someone else, if I sell you something and I sell that for 278,000 Rand, the 278,000 Rand is your cost because that's what you paid for that machine. Okay, so for me, The amount that I depreciate on is 208,000 that I depreciated on when the machine was still mine. Then I sold it to you. Now the cost for you is 278,000. So you are depreciating this machine at 278,000. But because our two companies are consolidating, now we need to eliminate the profit. Meaning we are then also cancelling that amount of cost that you paid basically extra. So we are cancelling that profit. So now we also need to fix the depreciation because you've been depreciating this machine at 278,000. And because we are consolidating and because we are eliminating the profit, you now need to depreciate the machine at only 208,000. Okay, they tell us the remaining useful life is 5 years. So that depreciation will then be over 5 years. Okay, so it's 31,500. That 31,500 is the profit. But remember, we only have 45% interest. So it's that 31,500. And then we divide that by 5. And then you get your depreciation that we need to remove to be 6,300. Okay, then we get our profit before tax. Then we have the income tax expense. So remember, from your income tax expense, we focus again on the parent company. So the income tax expense is 824,000. Now we just need to look at where did we change the tax or where was the tax effect. The tax effect will be on that depreciation. So on the 6,300 as well as on the profit of that sale. And then we get the profit for the year. There's no total comprehensive income. So that's then the total income for the year. Sorry. Okay. And then at 2.3, they ask us, assume that REM Limited is entitled to 15% of all the revenue, expenses, assets, and liabilities of Snooze Limited. The arrangement was classified as a joint operation in accordance with IFRS 11. Now they ask you to prepare the statement of profit and loss and other comprehensive income for this group. Okay, so now this is a good example of the difference between joint venture and joint operation. Sorry, and that's not 15%, that's 45%. Okay, sorry, I misread that a little bit. Okay, so now your revenue, see the difference. The first one, we were focusing on parent company's revenue. Now we are focusing on both, but the company we purchased interest in was only at 45%. Same for cost of sales. It's the parent company plus the cost of sales of the company that we purchase interest in, but at 45%. And then this is the cost of sales figure from the sale of inventory that we are eliminating. Then for other income, you'll see the 460,000, that's your dividends received. For the company we purchase interest in, there is only other income. So we take the 220 times the 45%. We still deduct the portion of dividends paid. And then we deduct the profit on the sale of the machine. Okay, and now you'll see there's no line, not there, not on this slide, for share of profit of the joint arrangement. Okay, because we are adding revenue in revenue. We are adding cost of sales in cost of sales. Okay, so be careful. If they ask you, so in 2.1 or 2.2, they ask you to do this for this group, and then in the question, they told us it was a joint venture. So if it's a joint venture, we focus on the parents' figures, and we have a separate line that says share of profit of joint venture. If it's a joint operation, then we add. We take the revenue for both of them, so the 8.8 million that you can see there, plus the 4 million. But now the 4 million will only be at the percentage interest that we have. Okay, and then we do the same for your other expenses. So this 1.4 is on the trial balance. The 540 is on the trial balance. That's 6,300. That's your depreciation. Then we have all the income tax expenses, and then we get the profit for the year. Okay, so that was then learning unit 4 and 5. Any questions there on question 2? Guys, Andre, you're asking where did we get the 31,500 for the depreciation figure? Let's quickly go there. So that 31,500, you'll see there's the calculation. So it's the basically the selling price. So we sold that machine for 278,000 minus our carrying amount. So that gave you the profit. But because this is only a learning unit 5 question, so we don't have control, it's only a joint arrangement, we only take 45% of that profit. And that's where the 31,500 is coming from. Okay, any other questions? Okay, then we can go to question 3. Sorry, I think you guys are so tired because I know you wrote finance this morning and then there wasn't too much time and now it's me again. So sorry about that. Okay, so question 3 is then they give you the consolidated financial statements for the Sportech Limited Group for the year ended 31 December 2023. Sportech Limited specializes in sport medicines and the retail of products that are in line with sports medicine, such as braces, tapes, bandages, joint guards, and supplements. Then they give you the consolidated statement of financial position. They give you the equity and liabilities there. They give us the consolidated statement of changes in equity. They give you the statement of profit and loss and other comprehensive income. there's some additional information. They tell you what your property, plant, and equipment consist of. Then they tell us that during the current year, Sportstech Limited replaced an existing machine with a new machine to meet production demands. The replaced machine had a carrying value of 1.5 million rand on the date of sale, and it was sold for 1,860,000. The gain on disposal is included in other income. Then other income includes investment income of 20,000 rand. Other expenses include depreciation of 800,000. This includes depreciation on the machinery acquired and disposed. Okay, so you'll see in this question, they won't really test you on calculating depreciation and all of that. Okay, they're testing something entirely different. So they will probably always give you the depreciation and or then tell you that it was calculated already up to date. Okay, then at number 5, they ask us, or they tell us, trade and other payables include 88,000 rand due to SARS. And then they also give you the previous year's figure. Okay, so remember, very important there, on your statement of financial position, trade and other payables should be a line item, and then actually below that, there should be a line item that says taxation payable, which in this case they don't have. They've put the taxation payable portion with trade and other payables. Okay, so that's very important. We need to remove that for this question, because you'll see they ask you to do a cash flow statement, and we need the tax paid separately. Okay, so just remember that. Then at number 6, interest received and paid and dividends received and paid are disclosed as part of operating cash flow. Then number 7, there's no other non-cash items other than those identified in the given information. Sportstech Limited Group measures non-controlling interest at acquisition at the proportionate share of net assets of the subsidiary. And then you'll see they ask you to do the consolidated statement of cash flow for the group using the indirect method. And then 3.2, they ask you to basically recalculate the operating activities by using the direct method. Okay, so remember, for your cash flow, you need to know both methods, because if you do the wrong one, then unfortunately it's wrong. Okay, we can't give you marks if they asked, for instance, the indirect method, and then you give us the direct method. Okay, the memo specifically states that. So it's not the lecturers being nasty, but we cannot, if the method is wrong, you're not going to get marks for the operating activities portion. Okay, so this is actually a good question where they ask you to do both methods, so you can see the difference between the two. So please remember to study your two methods. Okay, because this question, your cash flow statement question, should be the question that you get full marks and the question that you do first. Okay, remember, you are allowed to do whichever question you want to do. You can do it first. Just make very sure that you number the question properly. Okay, because if the lecturer doesn't know what question it is, we start from question 1 and we mark accordingly. Okay, so please just make sure that you number the question then correctly. Okay, so this is the easy marks because they give you all the amounts. You just need to know where is what going. Where do I minus this? What is going with what? And what the method looks like. Okay, so let's start with the first one, the indirect method. So for the indirect method, we start with profit before tax. And be careful. Remember, they give you the profit and loss statement. On that profit and loss statement, the last figure you have there is profit after tax. Okay, so make very sure you need the profit before tax figure. Okay, so if we go back to the question, there they give you profit before tax, and that's the 1,996,000. Nothing else, not the profit after tax, not any of these split profits. You need the profit before tax. Okay, but now remember, if you do your profit and loss statement, this profit that you put in there, that's after all your income and all your expenses. And remember, not all your income is necessarily a cash income. For instance, if you make a profit from a sale of machinery, that profit happened because of the calculation you did. That's not additional physical cash that you received. Same for depreciation. We see depreciation as an expense, but it's not physical, actual money that you pay to someone or something. It's just SARS being nice because you've got a non-current asset. You can decrease your profit by calculating depreciation. Okay, so that's things that it's not cash. Yes, it's income, or yes, it's an expense, but it's not cash. So now we have to take this profit because we are doing the cash flow statement. So we take this profit and now we have to take out the non-cash items. Okay. So in the question, it's going to guide you. So they tell you that during the current year, they're at number 2, they replaced an existing machine with a new machine. And they tell you the replaced machine had a carrying value of 1.5 and it was sold for 1.86 million. So you can see there's a profit. They then also tell you that this profit is included in other income. We need to take that out because it's non-cash. Then also there at number 4, they tell you in other expenses, we have depreciation of 800,000. We need to take that out. It's non-cash. Okay. So now we take out, so we say adjustments for non-cash. We take out depreciation. So just be careful of the sign. So remember when we did the profit before tax, because depreciation is an expense, it was a minus to get to this profit. So now we have to add that back. Then your profit on the sale of machinery is your selling price minus the carrying amount, 360,000. But again, remember there at the top in your statement of profit and loss, this was a positive figure because it's income. So now we have to deduct this profit on sale of machinery. Okay, so we start with profit before tax. We do all the non-cash adjustments. And now we have to look at changes in working capital. Working capital is inventory, trade and other receivables, trade and other payables. Okay, so now we go back to our statements. Oh, sorry, why did I do that now? Now we go back to our statements. We look for inventory. There's inventory. We have the 2 figures. The one is for 2022, so that's your opening balance. The one is for 2023, so that's your closing balance. So we have to look at the difference between the 2. So did inventory increase or decrease? Same for trade and other receivables. We look at the difference between the 2, and then we see, okay, did it increase or did it decrease? Okay, so both of these figures increased. So if we go back there, so inventory, the difference between the 2, 396,000. Very important. If an asset increases, we put this as a minus. Okay, so same for trade and other receivables. This asset increased, so we put it as a negative. And now we get to trade and other payables. So on your trade and other payables, you can see the two figures. So the amount did decrease. And then also remember at bullet or at number 5, they tell us included in this is tax paid. We need to remove that. So from the opening balance, we remove 104,000. From the closing balance, we remove 88,000. Oops, sorry, that was too far. Okay, so there's your closing balance. We remove the 88,000. From the opening balance, we remove the 104,000. And because this is decreasing and it's a liability, it's also negative. Okay, and then they want you to present interest, dividends, and tax separately always. Okay, so the tax we've already taken out. So now we just have to take out the interest, take out the dividends. Then we get the cash generated from operations. And just after this, we're going to put back the interest and put back the dividends. Okay, so it's just represented separately. Okay, so your interest paid will be your finance cost on your statement of profit and loss, and your dividends received is also there. Okay, so you'll see then directly after we have this cash generated from operations, we put in interest paid, we put in dividends received, we put in the dividends paid, and then also your taxation paid. Okay, so the interest and dividends we've discussed already. This dividends paid, just be very careful that this is the parent plus the non-controlling interest portion. And you get that on the statement of changes in equity. Okay, so if we quickly go to that statement. So there's your dividends paid. They're almost at the bottom. And you'll see we use the total equity. Okay, so it's your retained earnings amount plus the non-controlling interest. So we need both. And then your taxation paid, this 558,880. That is on your profit and loss statement. So that's your income tax for the year. To that, we add the opening balance, the 104,000, and we minus the closing balance, which is the 88,000. Okay, then after we did that, now we get to investing activities and then financing activities. So investing activities, remember they purchased a new machine, but we need to calculate that. Okay, oh, sorry, we go back. So machinery, we have a closing balance and an opening balance. Okay, so that's the 7.8, the 7.4. So there's your 7.8. We minus the 7.4. The 800,000 is the depreciation. And the 1.5 million is the machine that we sold. So this will be a negative because we are acquiring PPE. We are paying money. Okay, that's why it's a negative. And then remember to also put in the proceeds on the sale of PPE. Very importantly, this proceeds is the selling price. It's not the profit. We put in the full selling price. And because we receive this cash, we then put that as 1.86 million positive. Okay, and then the last bit is our financing activities. So on this statement, let's just quickly go back there. You'll see you have a long-term borrowings, and then under your current liabilities, you have a current portion of long-term borrowings. Okay, so remember a long-term loan is split into a long-term portion and a short-term portion. So if you have to calculate whether your loan was increasing or decreasing, we have to take the long-term portion and we add the current portion or the short-term portion. Okay, so it's 3.9 plus the 600,000 for your closing balance, and then the 3.7 plus 400,000 for your opening balance. Then we compare the two, and then we can see whether that increased or decreased. Okay, so in this case, sorry, now I must just find myself again. There we go. Okay, so your financing activities, proceeds from long-term borrowings. So because it's increasing, we got more money. And then you'll see there's also issue of share capital, and that you'll find on your statement of changes in equity. So if we quickly go there, you can see there's your 900,000. Okay, so it says share issued. So if you don't have this, you don't put this to your cash flow statement. But if they issued shares, this will then be seen as financing activities. Okay, and because we received the money, it's a positive 900,000. Okay, any questions on the indirect method? Okay, then I think you can take your break. So it's pretty much 10 to 4. So we'll then restart at 4 o'clock, and then we'll basically finish this paper. So if you do have questions during the break, you're more than welcome to type it there in the chat, but then I will only answer them after the break so that everyone can just hear the response. Okay, so you can take your break, and then at 4 o'clock, we will recontinue. Okay, let's continue. Okay, so just before the break, we then ended the indirect method. So you'll see if we go back to the question for the indirect method, they've basically asked you to do the full statement. But then for the direct method, they only ask you to do operating activities then for the direct method. Okay, so your direct method is then your cash receipts from customers. We'll come to this calculation now. And then your cash paid to suppliers and employees. Okay, so that's the direct method. And then remember that your receipts is a positive figure, and then the cash paid gets deducted from that. And then 99% of the cases, they will not give you these amounts. So you then need to calculate that. So for cash receipts from customers, we need the revenue, we need the opening balance, trade and other receivables, and the closing balance, trade and other receivables. Okay, so for receipts to customers is inventory, and then your revenue, and then your opening and closing balance, trade and other receivables. Okay, so there's your revenue. We get that from the profit and loss statement. Then to that, we add the opening balance, trade and other receivables. So that's on your statement that they gave you, the statement of financial position. And then lastly, we deduct the closing balance, trade and other receivables. And then you get your total cash receipt from customers, and that total will then go to your cash flow statement. Okay, and then next is your cash paid to employees and suppliers. So there we need the cost of sales. We add closing balance inventory minus opening balance inventory, and that will give you the purchases figure. Then we add the opening balance, trade and other payables. Just again, remember that if taxation was included in your trade and other payables, you have to take that out. Then we deduct the closing balance, trade and other payables. Same thing, if the tax was in there, remember to take that out. Then we get purchases paid. Then to that, we add the total expenses amount. Okay, so on your profit and loss statement, you will get your expenses amount. And remember, this is only expenses. And then from that expenses, we take out the non-cash items. Okay, and then you'll get your cash paid to suppliers and employees, and that will then go back to your statement of cash flow. Okay, so then we have the receipts from customers. We have the paid to suppliers and employees. Okay, and then you'll see we also show the interest, the dividends, the tax separate. So we have our interest paid, that's minus 362,000. Dividends received, the 20,000. Dividends paid, remember we talked about this, it's from your parent, so the portion that's in retained earnings, as well as non-current, non-controlling interest. Sorry. So it's your parent plus your non-controlling interest portion. And then your taxation paid, the 558,880, that's coming from your profit and loss statement. That's your taxation paid. To that, we add the opening balance, we minus the closing balance. Okay, and then you will see that the operating activities balance is exactly the same for the two methods. So it's not that the amounts is changing in the end. It's just how you get to that balance. Okay, so make very sure that you know the two different methods. So you can see now they can either ask you to do both, or they can just ask you to do one of the two. Okay, and that's question 3. Any questions there? Okay, then we can look at the last two questions. So question 4, they ask you to define key management personnel in terms of IRS 24 related party disclosures. And then 4.2, close members of the family of a person or those family members that may be expected to influence or to be influenced by that person in their dealings with the entity. Provide 3 examples of people who would be regarded as a close family member in terms of AIS 24 related party disclosure. Okay, so 4.2, you will see that this question was also asked in the 2024 paper. Okay, so this is a question that they like to ask. Okay, but let's first look at 4.1, key management personnel. So IIS 24 related party disclosure define key management personnel as those persons who have responsibility and authority for planning, directing, and controlling the activities of the entity, either directly or indirectly, including any director of that entity. Okay, so that's your key management personnel. Then 4.2, your close family members. And remember, on Friday, I also told you that it's 1 point or 1 mark per bullet point that you see there. So you can't say that person's children, spouse, or domestic partner and then think you'll receive 3 marks. Okay, that's only 1 mark. Okay, so it's that person's children, spouse, or domestic partner, children of that person's spouse or domestic partner, and dependents of that person or of that person's spouse or domestic partner. Okay, so that's the 3. You have to mention all 3 to get the 3 marks. Okay, then question 4 continues with part B. And there they tell us that Aitken Limited have 20,000 employees, 16,000 of which belong to the Trade Union of Retail Workers. Trade Union of Retail Workers was able to negotiate a 16% wage increase for all its members during the year. Mr. Polo, who is a senior member of Trade Union of Retail Workers, led the negotiations for the members. And Mr. Polo is also a non-executive director of Aitken Limited. Okay, then at 4.3, they ask us, discuss whether Mr. Polo and Trade Union of Retail Workers are related parties of Aitken Limited in accordance with international financial reporting standards and AIS 24 related party disclosure. And then 4.4, in terms of AIS 24 related party disclosure, Information about related party transactions and outstanding balances necessary for an understanding of the potential effect of the relationship on the financial statements must be disclosed. Provide the minimum disclosure requirements in terms of AIS 24 related party disclosure as it relates to related party transactions. Okay, so 4.3, you'll see that was also in the 2024 paper. Okay, so again, that's the type of question that they like to ask. Okay, so let's quickly look at that. You'll see it's very similar to what we said on Friday as well. So in terms of AIS 24 related party disclosure, any director, whether executive or non-executive, is a member of the entity's key management personnel. A person is a related party to an entity if they are a member of the key management personnel of that entity. According to AIS 24.11, a trade union is not deemed to be a related party of the reporting entity simply by virtue of normal dealings with the entity alone. In terms of AIS 24.9, a person is a related party to the reporting entity if that person has control or joint control over the reporting entity. Mr. Polo, in his leadership role in Trade Union of Retail Workers, exercised significant influence or control over its activities. In accordance with IAS 24, entities are related if they are controlled by the same person. Therefore, Etkin Limited and Trade Union of Retail Workers are related. Okay, so that's quite a mouthful. First of all, remember, you don't really have to say the AIS 24.11 and 24.9. You can just sort of mention this in your own words. Okay, then 4.4, what's the minimum disclosure that must be included? The nature of the related party relationship, the amount of the transaction, the amount of outstanding balances, the provision for doubtful debts, the expense recognized during the period in respect of bad or doubtful debts. Okay, so that's the minimum disclosure that we need to include. Okay, and that was the 2023 paper. Okay, any questions from your side? Yeah, it feels as if this was now very quick and very short. Okay, but I also don't want to waste too much of your time. I know this was a rough day. So most of you do have my email address. I don't know if your lecturers maybe told you or if it was all the campuses, but our campus switched over to the Emirates emails today. So so if you send an email and there's an issue or you don't get a reply from me, just resend an email to the new email address. I'm going to post it there for you now. But I think the emails, because I still got the emails just before the session, and even the ones that some of you sent now. So I'm sure the old one is either still working or they are sort of forwarding that automatically. But just in case you do not get hold of me, then it's erothman@emirates.ac.za. Okay, so just in case some of you are looking for me and you cannot find me, then you'll probably then find me on the new email. Okay, so I will be on my emails a lot in this couple of days before your exam. If any of you need help, you're more than welcome to send me an email. And I also always tell the students, you can send the email anytime. Okay, I don't mind 2 o'clock in the morning, 5 o'clock in the morning, 11 o'clock at night. Whenever you are studying, if you struggle, you get stuck, send your email. Okay, you don't have to wait till 8 o'clock in the morning because by that time you've probably completely forgotten what you wanted to ask. Okay, so you're more than welcome to send your email. I promise you I will get back to you as soon as possible. Okay, so all the slides that we've done Friday and today will be shared with your lecturers. So please make sure to get that. If not, you're welcome to send me an email as well. Then I will send you the slides. But other than that, I will still be in the session because we still have time. But then, good luck with all the studies. Good luck with the exam on Friday. You're almost there. Okay, you third year, you can get your degree after this. So make sure you study hard, get this over and done with. Okay, you don't want this one module to sit there and let you come back next year. Okay, but if you need any help, please ask, send an email, and then good luck. I really hope it will go very well with all of you. Okay, Kaylin, you're asking how do you prepare the bridge consolidated statement of financial position for the company and its subsidiary? Was it not then statement of cash flow? Because for learning unit 6, they can't ask you a statement of financial position question. They need to give you that statement, and then you can do the cash flow statement. Okay, so are you sure they asked you the statement of financial position? Okay, let's quickly see. I'm quickly going to open that paper. Do you perhaps have the question number by any chance? Question 2. Okay, let's quickly see. Okay, you say hen limited. The one I have is there's a ham limited and there's a how limited. How and sow is the one that I can open. And the other one is ham limited. Okay, well, let's quickly see. Maybe the question are the same. Oh, I see this one. This one is now on Ham Limited. They also ask you the consolidated statement of financial position. Okay, let's just quickly see. Oh, wait, I've got N. Okay, sorry, I can open N as well. Okay. Okay, so they ask you prepare the abridged consolidated statement of financial position of HEN. Oh, they give you the cash flow. So they give you consolidated retained earnings. There's profit before tax, tax, profit after tax. Then they give you at number 4 cash flow from operating activities, cash flow from investing activities, cash flow from financing activities. And then they ask you to do the abridged consolidated statement of financial position. Okay, so with that, because I also see the statement that they give you. So sort of in where the question starts, it gives you asset, equity, and liabilities, and then assets and equity and liabilities. So they give you the opening balances. So you then need to calculate the closing balances from the additional information that they give you. Let's quickly see if I can't. Okay, I'll have a look at that a little bit, but I think that's what you're going to have to do. You're going to have to, from the information that they give you in the cash flow, because remember they tell you, for instance, your trade receivables increased with 10,000, your inventory decreased with 15,000, your trade payables increased with 20,000. So by using all of that, you will be able to fill in the closing balances on that statement that they give you. So they give you the abridged consolidated statement of financial position, but only the opening balances. So by using your cash flow statement, you will be able to then calculate the closing balances, and then you use the closing balances to then do your statement of financial position. Okay. Personally, I must say, I don't think it's going to look like that again. Because remember in 2020, that was COVID and all of that. So the papers for 2020, I sort of recommend the students to don't worry about that specific year too much, because we were doing it from home and then we went back to campus and then that didn't work. And then, so yeah, the papers for that year was a bit funny. So I wouldn't worry about that too much. Okay, so I think if you can do your cash flow statement from the statements that they give you, then you should be fine. Okay, so the 2020 year, I think we must erase that in a sense, because, yeah, like I said, some of it were take home exams, some of it not. And then because it was take home, they sort of had to make it a little bit more difficult, because now the students have their books and everything in front of them. So yeah, I think that might be a good idea to not worry about those papers too much. That specific year, 2021 up to 2024, that's fine. You can worry about that. Okay. But yeah, how you would do it is you will focus on your cash flow statement to get your closing balances, and then from the closing balances, you'll do your statement. Okay, any other questions? Okay, it's a pleasure. Kaylin, can I ask you to just please send me an email? I see I can't attach anything to this chat. So if you send me an email, then I will reply. And then I will send you the 2022 paper. I actually think I have the slides for the memo as well. So then I can almost share that whole thing with you. Oh, goodness. Okay, I'll have a look. Did I reply to you on that email that you sent? Otherwise, then I'm sorry, then I will send it to you.